Booyah! Market mayhem means money. Your June 2nd Global P and L Power Up. Welcome to your International Markets Update for June 2nd, 2025. I'm Jim Cramer, and today we're diving into the latest movements in the stock, cryptocurrency, and commodities markets, as well as key geopolitical developments. Strap yourselves in, folks, because the action is red hot. We're talking about a market that's absolutely on fire, with opportunities popping up left and right. But you gotta know where to look, and that's why I'm here, on behalf of my good friend Bruno, to guide you through the noise and straight to the profits. We're not just scratching the surface, we're going deep. This isn't just another boring financial report, people. This is your ticket to understanding the forces shaping your portfolio, your investments, your future. We've got stocks defying gravity, crypto going to the moon, and commodities that are making some serious waves. Think oil, think gold. The classics are roaring back. And don't even get me started on the geopolitical chessboard, because every move there sends ripples through Wall Street, Main Street, and every street in between. Are you ready to make some money? Are you ready to get educated? Then let's get to it. Because here with Bruno, we believe in empowering you, the individual investor. We're cutting through the jargon, the FUD, the nonsense to bring you actionable insights. Today, June 2nd, 2025, is a day where fortunes can be made, but only if you're prepared. We'll look at what Jerome Powell is cooking up, what those job numbers really mean, and how tensions across the globe could be your signal to buy, or maybe sell. We'll figure it out together. So grab your notebooks, turn up the volume, and let's make some sense of this magnificent market madness. Booyah! All right, let's kick things off with the good old US of A, where the stock indices, yes, the S&P 500 and the Dow Jones Industrial Average, decided to paint the town green on Monday, June 2nd. We saw a beautiful rally, a magnificent surge, fueled by, get this, oil and gold prices catching a serious bid. Now, some nervous Nellies might point to those escalating trade tensions between the U.S. and China. And yeah, that's a headline, that's a concern. We're not ignoring it. But the market, my friends, the market has a mind of its own. It saw strength in commodities, it saw underlying value, and it said, we're going higher. This is the kind of resilience I love to see, the kind of fight that tells you there's still conviction out there. Don't let the fearmongers scare you out of your positions when the fundamentals are screaming opportunity. The S&P 500, that broad measure of American corporate might, showed its muscle. The Dow, packed with those industrial titans, wasn't far behind, posting gains that made portfolios sing. This happened even as the rhetoric between Washington and Beijing got a little spicy. What does that tell you? It tells you that investors are looking past the immediate noise, perhaps anticipating resolutions, or simply focusing on sectors that benefit from the current environment, like energy and materials. This isn't just a random blip, it's a statement that says, we can handle the heat. But, and this is a big but, you gotta stay nimble. You gotta be watching those trade headlines like a hawk, because that situation can turn on a dime. For now, though, the bulls are in charge and they're running strong. Now hold on to your hats, because today, June 2nd, is a huge day on the US economic calendar. We've got the one, the only Federal Reserve Chair, Jerome Powell, stepping up to the microphone. Every word, every sigh, every blink from this man will be scrutinized by Wall Street wizards looking for clues. What's he going to say about inflation, about interest rates, about the strength of the economy? His remarks are pivotal, people. They could send markets soaring or tumbling, so you better believe we're all ears. This isn't just background noise, this is the melody the market dances to. He's got the power to move mountains of money with just a few carefully chosen phrases. So listen up. And if that wasn't enough to get your heart racing, we also have the release of the May non-farm payrolls report. This is the big one, the heavyweight champion of economic indicators. It tells us how many jobs were created, where they were created, and what that means for the average American worker. A strong report could signal an overheating economy, forcing the Fed's hand on rates. A weak report, well, that could mean the Fed takes its foot off the brake, maybe even hits the gas. These events, Powell's speech and the jobs data, are absolutely critical because they will directly influence future monetary policy decisions. Are we looking at more hikes? A pause? Dare I say a cut? Today we get some serious answers, so stay tuned. Booyah! Let's talk about the digital gold, the future of finance, the one and only Bitcoin. It has absolutely rocketed, surging a phenomenal 3% to blast past the $71,000 mark. $71,000, are you kidding me? What's lighting this fire under Bitcoin? It's all about those whispers, those expectations that the Federal Reserve might just be sharpening its scissors for an interest rate cut come September. This is huge. Why? Because weaker U.S. job openings data, which we've seen, is signaling to the market that maybe, just maybe, the economy is cooling enough for the Fed to ease up. And when the Fed eases, risk assets like Bitcoin often party hard. This isn't just a pump, it's a paradigm shift in sentiment. But wait, there's more. It's not just King Bitcoin having all the fun. Oh no, the altcoin army is on the march. Ethereum, the smart contract king, is seeing significant gains. BNB, the powerhouse behind Binance, is climbing. Solana, with its lightning-fast transactions, is also on a tear. The whole crypto ecosystem is buzzing, electrified by this potential shift in monetary policy. And get this, the rumor mill is churning, folks. Speculation is mounting that BlackRock, yes, the behemoth BlackRock, might soon file for a spot XRP ETF. Can you imagine the floodgates that would open? An XRP ETF from BlackRock could pour institutional money into Ripple and further invigorate the entire crypto market. This is not a drill. This is where the action is. Let's switch gears to the tangible, the real stuff. The commodities, oil prices, black gold, Texas tea, whatever you call it, climbed nearly 3% on Monday. 3%. That's a big move, people. What's driving this gusher? We've got supply concerns, serious ones, stemming from those devastating wildfires up in Canada, a major oil producer. That's taking barrels off the market. And then you've got OPEC Plus, the cartel of oil-producing nations, deciding to hold the line, maintaining their current output levels. They're not opening the taps wider, no sir. So tighter supply, steady demand, you do the math. That means higher prices at the pump and bigger profits for oil companies. This is a classic supply squeeze play. And speaking of precious things, gold prices rose over 2% on Monday, hitting a glorious 3-week high. Why the Midas touch now? It's a cocktail of factors. We've got a weakening US dollar, which makes gold cheaper for holders of other currencies. Then add in those escalating geopolitical and trade tensions we talked about earlier. When the world gets scary, where do investors run? They run to safety, and gold is the ultimate safe haven asset. It's been that way for thousands of years, and it's not changing now. But it's not all smooth sailing in commodities. The cocoa market, the stuff that makes our beloved chocolate, continues to face massive challenges. Prices are hitting record highs, not because everyone's suddenly eating more chocolate, but due to adverse weather and disease-devastating crops in West Africa. This is a tough break for chocolate lovers and a volatile market for traders. Let's double-click on gold, because this story deserves its own spotlight. On Monday, gold futures, that's the contract for future delivery of this precious metal, opened at a stunning $3,323 per ounce. $3,323. That's a solid 1% increase from the previous close, and it tells you something important is happening. This isn't just a flicker. It's a sustained glow, a beacon in the stormy seas of the market. Investors are not just nibbling, they're taking big confident bites out of gold. Why? Because the smart money knows that when uncertainty reigns, gold is king. It's your portfolio's best friend during turbulent times, a true store of value. The uptick, this beautiful ascent, is largely due to those ongoing trade tensions we've been hammering home. When major economies are at odds, when tariffs are flying, when supply chains are threatened, investors get nervous. And what calms those nerves? The timeless allure of gold. Add to that a weakening US dollar. As the greenback loses a bit of its mojo, gold becomes even more attractive. It's a classic inverse relationship, and it's playing out perfectly right now. People are seeking safe haven assets, and gold is at the top of that list. It's not about chasing fads, it's about prudent wealth preservation, and yes, even growth, when other assets are looking shaky. Don't underestimate the power of gold in this environment. All right, let's zoom out to the global stage, because what happens in Beijing, Washington, or Riyadh has a direct impact on your money. Tensions, folks, have escalated as China is now publicly criticizing the US for what it calls inconsistent policies. Beijing is not happy, and they're saying these policy flip-flops have intensified economic and trade uncertainties. This isn't just diplomatic squabbling. This is high-stakes poker with global economic stability on the line. When these two giants start throwing shade, the markets get jittery. You need to understand these dynamics because they create both risk and opportunity. Are you paying attention? You better be. This is where fortunes are won and lost based on who's reading the tea leaves correctly. Meanwhile, President Donald Trump has been on a whirlwind tour of the Middle East with recent visits to Saudi Arabia, Qatar and the UAE. The official line focusing on securing business deals and investments. Billions of dollars are potentially on the table, which could be a boon for certain U.S. companies and sectors. But as always with geopolitics, it's complicated. This charm offensive has also stirred regional dynamics, especially concerning those ongoing U.S. sanctions on Syria. Every handshake, every deal, every statement in that volatile region sends ripples across energy markets, defense stocks and beyond. You can't just look at a stock chart in isolation. You need to see the bigger picture, the geopolitical currents that are shaping the flow of capital around the world. Now let's hop across the pond to Europe, where they're not just sitting idly by watching the world change. Oh no, in response to those shifting US policies we just talked about and the general air of uncertainty, European nations are getting proactive. They've formed the Weimar Plus Alliance. This is an expansion of the original Weimar Triangle, Germany, France and Poland, now bringing the UK and Italy into the fold. Think of it as Europe circling the wagons, strengthening ties and trying to project a more unified voice on the global stage. This is significant, people. A more cohesive Europe could mean a more stable trading partner or perhaps a more formidable competitor. We need to watch how this alliance develops and what policies it champions. And that's not all. The EU has also proposed the Readiness 2030 initiative. What's that, you ask? It's a major push, a multi-billion euro plan aimed at bolstering Europe's defense capabilities. With all the uncertainties swirling around US military support and the shifting geopolitical landscape, Europe is saying we need to be able to stand on our own 2 feet. This means more spending on tanks, planes, cybersecurity, you name it. This could be a huge tailwind for European defense contractors and related industries. It's a clear signal that the continent is taking its security much more seriously, and that has profound implications not just for regional stability, but for investors looking for growth in the defense sector. This is a trend you cannot ignore. That's all for today's International Markets Update. What a whirlwind, huh? We've seen stocks climb a wall of worry, Bitcoin blast off to new frontiers, and commodities like oil and gold remind us why they're timeless stores of value. The geopolitical stage is as dramatic as ever, with China, the US and Europe all making moves that will shape our financial futures. Remember, in this market, knowledge isn't just power, it's profit. You need to stay informed, stay agile, and most importantly, stay in the game. Don't let the headlines scare you. Let them guide you to the opportunities. My mission here with Bruno is to arm you with the insights you need to navigate these choppy waters and come out on top. We've looked at Powell's upcoming pronouncements, the crucial jobs report, the potential for a BlackRock XRP ETF. These are the catalysts, the tells that can make you money if you're paying attention, from Canadian wildfires impacting oil to West African weather hitting cocoa. Every piece of news has a market consequence. It's all connected, and understanding those connections is key to building lasting wealth. So, do your homework, trust your gut, and never stop learning. The markets are a wild ride, full of ups and downs, but for those who are prepared, for those who are willing to learn and adapt, the rewards can be tremendous. Keep your eyes peeled, your ears open, and your portfolio diversified. There's always another opportunity just around the corner. Stay tuned for more insights and analysis. I'm Jim Cramer, and I'll see you next time. Booyah!